We've got Upasana Chashra, Chief India Economist at Morgan Stanley, joining in on the show right now. Upasana, hi, good morning. Good to have you on the show. It seems like it's going to be an inevitable 25 bips rate cut tomorrow. But looking at how the global dynamics are playing out right now, what with the Fed and the state of the global economy, fears about recession in the US, do you think the RBI could get more aggressive than that?
Hi, good morning. Yes, tomorrow, but with a change in stance to accommodative, we think that risks to growth are increasing, and basis that the RBI will probably need to change the stance to accommodative, even as it delivers probably a much expected 25 basis points rate cut. The change in stance would then give more comfort and also, in a way, policy guidance that there is more rate easing to come through. We do think that there is going to be another rate cut in June as well. And post that, it will depend more on the trajectory of growth, where definitely downside risks have become more pronounced now.
All right. Hi, Upasana. Good morning. This is Shrishti also joining in. But there's been a lot happening globally, Upasana, in terms of the tariff and the implications. And some do believe that it could have implication on the India GDP as well. Help us understand that. How are you looking at the situation and any adjustments that you are likely to make if the Trump tariffs go across and a 26% tariff is being implemented for India?
So the imposition of tariffs in terms of the reciprocal tariff rate at 26% is surely on the higher side versus what was sort of expected if we were to just look at the weighted average or the simple average tariff rate that India has on US goods. But if 26% is higher than that, and therefore it's not just the tariffs, I think, but also the uncertainty that this whole change in US trade policy brings about, which impacts business confidence and therefore the ability of businesses to invest, which sort of exacerbate the growth slowdown. As of now, our base case has been 6.5% for growth for fiscal 26, but we do see downsides of about 30 to 60 basis points to this number. The direct impact for India in terms of the trade exposure is lower when you look at it versus some of the other Asian economies, given goods exports to GDP is at 12%. It's relatively low compared to other economies. Within that, our exports to US are about 2.1%. And if we were to X out energy and pharma, which are currently not in this basket of reciprocal tariffs, the number is at 1.7% of GDP. So on these metrics of trade exposure, the direct impact will likely be less worrisome. But as I mentioned earlier, it is the indirect impact through the slowdown in global growth, global trade, and the impact that it has on business confidence, which sort of freezes the capex cycle, is what we worry more about. Of about 30 to 60 basis points to our growth estimate currently for fiscal 26.
The other concern is around inflation, right? And for us here in India, it's expected to come down to a 5-year low. A few months ago, it was above 6% tolerance level of RBI as well. Do you think inflation is going to ease off and remain in that sub 4% mark for the coming few months too?
So yes, inflation, I think, is sort of a good news for India and a silver lining. Inflation numbers have been better than expected in this year or the last three sort of odd readings that we've got. We do think March would also be below 4% and probably the next few months as well. Our current number for fiscal 26 on inflation is at 4%, averaging with a good part of CY 25 sort of remaining below the 4% mark, driven by easing food inflation. So I think inflation by itself does open up the room for RBI to react and respond. If they were not to do that, then real rates would expand. And then in this context of increasing external risks, of course, that has its own adverse impact on the growth trajectory. I think inflation is less of a worry at the moment, given where we are on the food inflation cycle, and also probably as this tariff impact is going through in terms of the slower global growth, and therefore commodity prices, like we see volatility now in oil price moves in the last few days, that also creates a less of a inflationary impulse from the non-food basket. So all in all, inflation, yes, looking much closer to RBI's target of 4%. Probably next few months could be below 4% as well.
Upasna, I also just wanted to touch a base on the equity markets because India is one of the fastest growing economy. Now, equity markets are already factoring in a mid-teen EPS growth, considering some downside risk to the GDP growth, like you also mentioned. But A, do you think that nominal GDP growth will still be in double digits? And B, help us with your take that do you think that the brokerages will now revisit their estimates and the earnings downgrade may begin from this quarter?
I think growth numbers would probably be seeing some downside, as I mentioned earlier. Nominal GDP growth, I think, in my view, would probably, just about probably around double digit, depends on how the GDP deflator also fares. As I mentioned, we've seen some moves in the oil prices, and therefore, let's see how the global commodity prices sort of pan out, because that would have a bearing on GDP deflator and then the nominal GDP. Recall WPI inflation has been consistently lower than CPI in the past for India as well, and that has meant that even trailing GDP deflator numbers have been sort of muted. So I think nominal GDP growth would probably be at best around 10.5%. Let's see how the GDP deflator pans out. I think on earnings, probably it would be a function of finally how the tariff and the certainty around it settles. I think more than just earnings, it's probably going to be quite a bit focus would be on getting clarity on this tariff situation and how, say, the talks between US and India in terms of the trade deal pan out. Tariff settle.
We have snapped that line with Upasna, but with this, we'd like to thank you, Upasna, for taking the time out. We definitely take note of all points you have been making. So a 25 basis point is what she's penciling in. Let's see whether or not there's a change in the stance. But well, of course, if tariff come into play, there could be a likely hit on the GDP, and Upasna is penciling in a 30 to 60 basis point of hit on that front.
If you like this video, then like, share and subscribe to ET Now.